Good morning, folks. In today's segment, we'll be talking about the aftermath of the Federal Reserve meeting, which happened yesterday, the implications of them on the gold price and, of course, on Bitcoin. And more importantly, where are those opportunities in the market? So, without any delay, let's continue. Before I do that, as always, it is important for me to go through this brief disclaimer, which is right in front of you. Now, bit of a background of what happened yesterday. The Federal Reserve meeting has been perceived as a very hawkish meeting. Why? Because now the Federal Reserve believes that there could be two interest rate hikes in 2023. Now, of course, previously that was indicated the two interest rate hikes are going to be taking place in 2024. Now, the fact that the Fed has brought those interest rate hikes little bit more forward, what that has done in terms of a gold price, this is what really happened on back of that. We saw this massive sell-off yesterday, as you can see from this gold price or daily price chart, that this massive sell-off happened. The price came into this area of support, something that we kind of mentioned yesterday in our analysis as well. It just went slightly bit, just a dollar or two lower than that. But now the price is clearly oversold. And now also the price is trying to break above its important moving averages. So let me explain the moving averages first before we go into any further detail. Over here, we have our 200-day simple moving average, followed by that is your 100, and finally your 50-day simple moving average. The concept is very simple. As long as the price continues to trade above these moving averages, institutional investors consider that as a bullish signal, and then they buy the price, and when it kind of drops near its important moving averages. So basically, when the price gets close to its 50-day simple moving average, we saw the price moving massively to the upside. Similarly, when the price crossed above the 100-day simple moving average and the 200-day simple moving average, we saw a lot more momentum coming in. Now the opposite is very much going to be taking place now, because the price over here crossed below the 50-day simple moving average, the first bearish signal, and the second one is coming as of now, as the price has dropped below the 200-day simple moving average. But if this price moves above this 200-day simple moving average and crosses above that 50-day simple moving average, we are likely to see more momentum to the upside. But otherwise, the price is more likely to break to the downside. Now, we have to adjust our support zone in the light of what happened yesterday, and I'm going to move my support zone where my 100-day simple moving average is very much trading in. So let's focus on this particular zone now, between 1772 to 1796. I think that represents a better area of support now in terms of a price action. And if the price can stay above this particular moving average, we are likely to see more momentum to the downside. However, if the price breaks below that, then really we are be moving towards that 1727 sort of a price level in terms of gold price. Now, quickly switching gear and moving into Bitcoin. Yesterday, bit of a recap. What we said was that the prices are likely to see a bit of a reversal. Prices are likely to see a bit more sell-off on the back of the Federal Reserve meeting if those are hawkish minutes. And that is what we have seen yesterday. The prices did kind of moved away from that 40,000 price level, went all the way to over here, and now prices are trying to see some bounce back up. Now remember, yesterday we talked about the concept of lower highs. So we have a lower low, we have a higher low right over here, and then we have another sort of a higher low forming over here. Similarly, we have a high over here, and we have a higher high forming right over here. The concept is that as long as we have a higher low and a higher low and a higher low, prices will continue to move to the upside. Similarly, as long as we have a lower low, higher low, and a higher low, so that means the prices will continue to move to the upside. So really, Now the question is, can the price can stay above this critical price level or not? Because if it can, then we are likely to see more momentum to the upside. But if it can't, then the momentum is very much going to be in this area of support, which we have mentioned in our previous analysis. Overall, when we look at Bitcoin price, what we really see is that there is another sort of a bullish pattern formed. So let me confirm that bullish pattern. What do I mean by that? We have a shoulder over here, we have a head over here, and we have another shoulder forming over here. So that neckline, sort of this particular reverse head and shoulder pattern, is very much going to be right over here. The price broke above that neckline, and now it is sort of retesting that, and then that is why this particular area is very, very important. On the fundamental side, things are looking a lot more stronger, because yesterday a survey showed that more and more hedge funds are willing to get involved in Bitcoin price now, and that should be very, very positive in the long term perspective. Something also I want you guys to pay attention to is the RSI, which is very much trading to the upside, and we have no really sign of weakness, because we have a high, we have a higher high, we have a higher high, we have a low, higher low, higher low, higher low, and another higher low. So the price is kind of forming that pattern. As long as this trend continues, we are likely to see more momentum to the upside. One final thing I wanted to touch base over here is your 4 hour time frame. On the 4 hour time frame, the prices are in really touching that 200 day simple moving average right over here, and that shows that the bulls are still very much in control of the price. Guys, remember, the markets do change, and then prices do change rapidly, and that means that you need to be very much aware of the new price action. And for you to do that, just smash that subscribe button and the bell icon, because the moment we produce a new video, which we do pretty much on a daily basis, you need to be aware of those ones and really trade in that direction. All right, folks, for the time being, we're going to leave our analysis right over here. To conclude, gold prices are way oversold. Bitcoin prices are holding on to their gains to some extent. We need to make sure that the price stays above these moving averages. That's all for now. See you guys next time.